Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, January 20th. Today we got existing home sales and actually continuing decreasing month over month, and the actual number 402 million was lower than the previous one but higher than expected, but still the negative 0.5 continuing lower. And actually there, I think it's like the 10th month in decrease since we have data from last year. So actually good news in terms of demand, but still a lot of way to go down, because remember, the Fed want to continue seeing cool down in the home sector and also the labor sector, but at least this is more demand destruction evidence, and I think we have to be happy about that. More news. Google is going to lay off 12,000 people, and actually this is good in terms of earnings because they are going to cut expenses. So the market reacted on a positive note, and Google is up 4.37% on the day. And overall, all the Nasdaq is doing quite well. The Nasdaq right now is 1.57 in the green. And even though we started pulling back a little bit, we are, as you can see, we started trending up and are now decreasing this trend, but still super bullish on the day. Higher highs, higher lows, and overall reaching this 11,500 that in the daily is quite an interesting level. We held this pivot at 11,300, and we are now again trying to test this trend line. So actually super bullish, and for next week we are waiting. We are already trying to push for this range between 11,600 and 700. I didn't have too much confidence today about this push. That's why I ended up trading just a little bit and barely in the green. But this is, let me explain you why. As I've been mentioning throughout all this week, today's third week option expiration with 5.4 million open interest and max pain of 390. Look at this. This big wall of puts means that Wall Street don't want to push or to let the market go down for these guys to be paid. And at the same time, they don't want to push 400 for these guys and overall all these puts, all these calls to be paid either. So they want to stay in between 390 and 400, and the more 390, the better. So if we check the S&Ps, we can see that we rejected 388, so we rejected lowest pricing as the put wall was showing, and we are trending, but it's a little bit slow. This is quite choppy, but still trending day, still in the green. The S&Ps are 0.90% in the green, and it's right now at 392. So as you can see, we are holding, and we are in between the range, not even close to 400, and Wall Street should be happy. So this is the kind of things you have to follow in this third week option expirations, because it provides a lot of context to these kind of moves. So even though this move was choppy, I think the manipulation, the inducement to the upside was prepared for that today. For next week, though, I think with all the economic data that we've been seeing that is positive for the Fed, I think we are going for this trend line. Let me show you on the S&Ps, because this is super interesting. As I was saying yesterday, this is the follow-up that I wrote yesterday. Look at this. I almost hit the exact low, but basically we are holding, we will be retesting, we will pull back, and we will push for this in huge trend line that we've been basically following throughout a year in 2022, and right now we are in a good shape for it to break. So I think this is super interesting, and we are coiling for that. This is looking very good for that break next week. For next week, there's plenty of room in the options market for it to push. So if we see the 27, look at this. There's no calls above 400. There's a lot of puts, but I think Wall Street is clear for that push. Let's check the 25. That is the Wednesday. Look at this, 400 calls, a lot of calls. I think we'll be slowly pushing towards 400, but not before Wednesday. And then towards Friday, we will let it push and we will break that trend line. That's what I've been watching. That I think that makes sense in terms of options. That also makes sense in terms of economic data, and it makes sense in terms of technical setup. So a lot of conjunctions and convergences, and I think it's time to break out. So be prepared, because I think good things are going to happen next week and the upcoming weeks. So stay tuned, because we are going to follow up on this. The big line in the sun is prepared for that breakout. The technical pattern, the economic data, the manipulations of options, it's all prepared, and I think it's already time for it to break out. So be prepared. I think regarding the rest of the markets, dollar is continuing lower. It's sideways consolidation. The yields are in the green, but nothing big. 350, and also in terms of futures, yields are still showing April and September at 4.8, and that interest rate cut at December. So no change. And look at this XLK sector fund in the green, XLY consumer discretionary. So you are also seeing the rotation, the money flowing into this risk on asset for technology, consumer discretionary, and financials. So I think there's a lot of things aligned in order to be prepared and to break out that trend line that we've been holding for more than 12 months. So be prepared, because big things are going to happen. As always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecasts, market updates, and market recaps. I put a lot of effort and I provide you with a lot of information. So please support the channel. It's always appreciated. I appreciate your time, and remember, the trading day is not over yet. If you continue trading, be careful with the Nasdaq, because it looks like it's starting to lose strength, and we may pull back a little bit. And just lock your profits and enjoy your weekend. So remember that discipline and risk management are key for your success. Enjoy the weekend, stay safe everyone, and see you on Monday.